All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to give an update on MakerDAO, ticker symbol MKR, break things down on the daily time frame as always. So make sure to smash that like button, subscribe to the channel if you guys are new. If this chart looks a little complicated or complex, it's actually really simple once you understand just a couple simple things that I'm doing in here. So I'm going to break things down for you, go over the current levels, key areas that I'm watching right now. But of course, as always, this video is not financial advice. It is simply for informational and educational purposes and is not intended to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker, so make sure to read the full disclosure. We're going to go ahead and jump into the video right now and go over our previous chart setup that we had last time, right? And so this is what we were looking at last time over here was initially we had some bullish divergence, okay? So that's indicated here by these circles on the chart. So if you take a look here, what we have is we have a low and we have a lower low and we have a lower low again in this area, right? So the token's clearly in a downtrend. But if you actually look at your RSI, which measures the relative strength of a token at its given price, you can see here we have a low, here we have a higher low, and here we have higher lows again. So initially off the first bullish divergence, right, we came here and we got a very strong bounce up to our major retracement levels of resistance, which we have over here as well. I'll explain those in a minute. All right. And then we came back down and we bounced off of the trend line here again, right here and right here. And you can see to start the year off in 2023, we are starting off with a bullish divergence and we had a very strong rally, right, from the $500 price level all the way up to 1,000. So roughly 100% move to start off the year from January to March. All right. Now we've recently had a pullback. Okay. And we were not able to really flip 918 from resistance to support. You can see that there's a lot of wicks up here, right? And there's a lot of sell orders and liquidity being drawn up above here. And this is what would be known as a liquidity grab, right? Because this is ultimately the major area. Okay. And they know that a lot of people are going to be bullish above 918. So what they're doing to actually put price down is they're letting it come up, right? And they're taking all the people buying in here and they're filling their sell orders and then pushing price back down. Right now, on top of that liquidity grab, okay, what we actually had was a bearish divergence at that moment as well. So we had a high here, a lower high here. If you take a look, we had a high and then a higher high. And I mentioned in the last video that you wanted to see bulls break out, retest this trend line, and push up higher if you're going to be bullish on this token. All right. And in fact, we got the opposite. We got a look above and fail, which is something I also mentioned to be cautious of. Right. And it's actually something really important to start understanding. A look above and fail is significant because right here at this moment, bulls are fully presented the opportunity to really retest this trend line and take control and push things higher. Rather than taking control when given this opportunity, what they did was they actually failed. And it shows, and it's significant because the bears are the ones who's actually in control, even when bulls are presented an opportunity to go higher. And then it came back and it retested and rejected that initial trend line here again, as indicated there. And we saw another move down, right? Now, I keep mentioning the fibs and the major resistance levels, right? What we have is the three most common and well-respected Fibonacci levels are the 61.8, the 50%, and the 38.2% retracement levels, right? And you use these to spot trend continuation versus trend reversals because nothing moves in a straight line down or in a straight line up. Rather, you would get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. And ultimately over here, we rejected our major retracement levels twice, right around the 50% level twice over here. And then we continued that downtrend, right? So we were actually in a larger downtrend, retracing up for a healthy retracement. And then we continued that downtrend. And as you can see, we put in lows and lower lows each time, right? So that's that trend continuation. And what the bulls are looking for here is actually a reversal. So if you move up, retrace, and then break through those retracement levels, you can spot a downside reversal. Now, you can also spot an upside reversal if you move down, retrace, consolidate, and break through those retracement levels, right? And so that's what the bulls are looking for here is we're looking ultimately for this consolidation and then a break above 918 and really where we flip that area from resistance to support. All right, so that's how we use those levels, and that's why these levels are my major resistance levels, is because ultimately they're the healthy retracement levels of this most recent downtrend we had from the 1100 area back down to the $500 area. Now, if we move on to the next slide, what we can see is our current chart setup, and these are the same levels that I went over. All right, and what I've done is I've added in the supply and demand zones since that time period, okay, since the beginning of the year. And what we have here is our demand zone from roughly 600 to about 650 is the rough demand zone. You can see that this is an area where each time we push down into this price, we wicked down into it multiple times and touched it. This is an area where price continues to push up higher, right? Multiple times each time we touched it, we end up getting a push up higher. All right, and our overhead supply zone is here from about 975 up to about 1050 is our rough supply zone here. And this is an area that we've tested, 2 or 3, 4 times, and each time we've come in here, we've had to move down. Now, these zones, whether it's a demand or a supply, are simply an imbalance of orders, right? So an imbalance of buy orders is what ultimately pushes the price up higher each time, is that there's more orders on the buy side in this area, and that imbalance of buy orders pushes price up higher each time we come down into the level. Now, the more times you test the level, the weaker it gets as these buy orders are getting filled, right? Whether they're passive or they're active, these buy orders are getting filled. And so essentially for this area to remain as strong as it was in the past, these buy orders would have to get replaced. So that's something you have to ask yourself, right? Okay, like, hey, do you think that the same people who bought over here and bought here and bought here, if we come back down again, are they replacing those orders, or do they still have enough orders to create an imbalance to really push price higher? Same thing up here, right? As soon as we came up, which was our first bullish price target actually of 1019, we hit that 1019 area 2 times. All right, and we saw a pullback. Then we tested this supply zone again here, and we pulled back. So there's an imbalance of sell orders. There's more sell orders than there is buy orders in this region of about 970 to 1050. And same thing, right? You have to ask yourself, are the sell orders from here being replaced if we come up and retest this zone? Okay. If they're not being replaced, then it's going to get weaker, right? The more times you test the zone, whether it's support and resistance or supply and demand, the weaker it's going to get overall. Now, when it comes to the RSI, all right, this is that initial look above and fail we had on the bearish divergence and then another rejection. And you can see we're getting close to testing it again. Now, we're also getting very close to our initial bullish divergence trend line that really sparked off some of the fuel to begin the year and really gave us that nice rally of about 100% move. So ultimately, one of these is about to break sometime soon. So play close attention, right? If we break this bullish divergence trend line and make a downwards move, most likely we're going to end up retesting this demand zone or possibly breaking below. So below 600, the next major area of support is right here around 516 as well as 443 if we break our previous lows. Now, to the upside, okay, if we get a breakout to the upside, remember, we don't want that look above and fail. Rather, we want to break out, retest, and push up higher, right? The major levels of resistance are 763, 840, and 918. Now, above those, if we break out above those and we're able to break through those, then that's when we're going to battle that supply zone. And ultimately, if we can push past the supply zone and break out furthermore, we have bullish price targets up here of 1134 and 1280. So that's it for today's video. Actually, one more thing, okay? There is a possibility we could be putting in a head and shoulders. So notice how we have a left shoulder here and we've got a head. If we just consolidate a little bit more and even push up to 763 or 840 and really aren't able to break out above these levels, then we're ultimately going to end up putting in a right shoulder. So we need to be cautious that we could end up getting this head and shoulders if we get a false push up rejection. Most likely that will take us back down to that 515 or 443 area. So, lots of things to pay attention to. Okay. Pay attention to your RSI trend lines right now. Look out for that head and shoulders. Okay. We don't want to see a hard rejection at 840 and really not be able to get above that area. But ultimately 918 is still going to be a really big resistance area as well. Okay, now above there, if we can flip that from resistance to support, okay, that's when we have the chance of hitting our bullish price targets and breaking out of our supply zone. Make sure to smash the like button, subscribe to the channel if you guys are new, and I'm out.